What is a market? A market is a place where people meet, right? They come here, here. Somebody comes to sell, somebody comes to buy. For example, let's do somebody wants to buy a car, so he comes to automobile market, car market. Somebody else wants to sell his car, so they will meet here, marketplace. It's a place where you meet the customer and the seller meet. If you talk about financial markets, actually it's the same thing, just instead of what we are used to talk, for example, whatever, cars, estates, and so on, we shall talk about financial assets, which are, actually there are around 15 types of financial markets, but all of them could be divided into three. These are stock market, this is currency market, which is named also Forex, and it's commodities, so like gas, so on. When you hear somebody is talking about trading, he means one of them. Sometimes you think, and you hear now, because it's a lot of people talking about this currency, cryptocurrency, I mean, like Bitcoin and so on, but it's a bubble, so it doesn't have anything behind. That's why we will not talk so much about it. By the way, a certain type of analysis you could use if you are anyway interested in trading crypto. The instruments I will explain are useful even there. I just don't like this market, but it doesn't mean that you cannot use the same instruments, because others nobody knows. There are, anyway, all of them started from commodities a long time ago. Yeah, the markets then it go to stocks. I will explain one more time what means stocks. For example, there is a company which is selling and providing commodities. So this company has some documents. Yeah, it is registered, incorporated. So these documents are, as usual, if it is a public listed company, I mean, if it is a big one, it's anyway public listed companies who provide even these commodities, and the money which you can use to buy these stocks, this is currency Forex market. So we are talking about three types of market, but they are connected between them all together. This is currency market like Forex. If you want to enter a certain market, for example, you want to buy stocks, Apple stocks. If you want to buy Apple stocks, you need dollars, because the stocks are sold in dollars, but you have pounds. So in this case, you go through this market buying dollars, and then you buy stocks. So anyway, do you want or you don't want, anyway, you go through this market. Or you want to buy commodities, anyway, they are sold in dollars. So anyway, you need dollars finally to buy, for example, oil, Brent we are talking, for example, about. Same, you need dollar. You want to sell this and buy shares in United Kingdom. In this case, you need pound. So, as a bridge between all the markets is Forex market. For better understanding, I would advise you just to understand this, and as a stock or a share, okay, a paper, valuable paper, of course, of a certain country. I mean, imagine that a country is actually a factory. So the stocks, as for example for Apple, there are stocks, shares, yeah? The same thing, kind of shares could be pound for UK or dollar for United States, because it shows, I mean, everything inside is paid, bought, sold, bought by these currencies. Actually, how it is made, how it is this why I'm talking about more about currency, because as you understood, it is a bridge between all other markets. This is one market, this is another market, this is another, this is another. But to get to whatever of them, you need some bridges. So all these bridges are based on the market named Forex. If you understand how to trade Forex, you understand how to trade everything, because all the things, all the assets are interconnected. You sell shares in certain currency. This currency, you buy another share, or other stocks, or other even future. I mean other types of papers. It doesn't matter. But anyway, you use money for that. Commodity is the same. So do you want or you don't? Anyway, you go through this market. That's why we need to understand at the beginning how it works, and then you can use the same type of analysis because of the thing that they are interconnected. That's why the same instruments are working everywhere. I mean, you can use the same instruments everywhere. What we need actually to understand, because we are preparing to open a business, yes, in this field. A business means a certain type of processes, business processes, like certain steps in which you put, for example, a certain amount, $1, 100, 1,000, 1 million, 1 billion, whatever. After certain steps, you get here more. For example, from $1, $2, or 200 or 2,000, and so on. I mean, actually, it is kind of investment, but in shorter terms. I mean, as usually, when you say investment, you imagine this as a long-term funding. When you give somebody money, and after 10 years or whatever, 50 years, you get more money back. But the same thing you can do kind of every day. For example, because even stocks, what means even investment, long-term investment, actually it means that you bought some stocks when they cost almost zero, they are very cheap, and after 10 years, if that company develops, you get much more back. Yeah, this is the idea. So it means, actually it meant that you bought here, and it increased till here. And what means? You bought cheap, here was cheap, and here is expensive. That's the idea. So finally, every business means you need to invest less, get more. This business will develop when you buy raw materials, if you want to produce something, and add a volume, and so sell it at a higher price. Or you can also just resell, buy something and just going across the road and sell it more expensive. It doesn't matter, but finally you add volume. You buy cheaper and sell more expensive. That's the idea of trading. Financial markets, why are they interesting? More interesting than every other markets, because we can just in few words we can compare. We can take few markets. For example, we can take one market of producing. For example, let's take, I don't know, furniture, producing furniture, I mean furniture factory. Then furniture reseller, I mean who doesn't produce but just a shop. We can take stocks, and we can take Forex, like currency, I'll put it like this. So if we will compare, you'll understand a bit of difference of which market is the best. Because the business, it's understandable. You need to buy cheaper and sell more expensive, of course. But what exactly you need to buy cheaper and how you find it? For example, if you buy cheaper medicine to sell them more expensive, it is not the best. Why? Because we need to understand that there is supply and demand. So when the price is made because of supply and demand, as big is the price, as big as is demand, so big is the price. But offer is reverse type, for example, and this is quantity. What's the idea? If I have one TV, but there are a lot of customers, its price will increase, of course. I mean, for example, a certain cost could be 2,000 pounds, but if there are a lot of customers, a long queue of customers, of course it will cost 10,000, 50,000, 1 million, whatever. There is no the sky is the limit. And at the same time, we can take another example. If they have 1,000 of these kind of TVs, and I have just one customer, of course in this case the offer is big and the price will go down because I don't have to whom to sell. I don't have customers, I don't have buyers. That's the idea. So for buying cheap and selling expensive shouldn't be a certain limit, a certain barrier. But if we analyze these like regulated items like medicine or food, some types of food, they are regulated by the government. You cannot put the highest, the maximum price. That's why this is not the best for a business. We just should analyze like few steps which are to choose the best thing for us. First of all, it needs to be regulated by the law of supply and demand, this kind of thing. In this case, if we talk about, like I said, furniture factory, furniture shop, stock market and forex market, they are all regulated exactly by demand and supply, all of them. So the price can be as big as you want. For example, furniture. I will not give example of every of these items because we will lose a lot of time. But just imagine, furniture, you can put the price what you want while producing. Okay, there are some things, but nobody stops you. You can put really what price you want. In the shop, the same, stocks the same, currency the same. That's it. Okay, they are based, they are not put from elsewhere. But I mean, it can really grow as much as you can imagine. So this would be kind of the same. The second thing, what is important in a business, if you buy it, so you need, for a good business, you need a supplier and the customer, and arrange a kind of bridge between them. So you need a supplier. If you need a supplier, you need where from to buy some goods. For furniture, there are some certain things, like it can be problematical sometimes because it can be one supplier for a certain region, so it's not so much as you want. Or for example, if you buy wood from Russia, there are sanctions, you cannot buy wood from them. So it's kind of plus minus. I mean, it doesn't have a lot of good things. If we analyze as a shop, kind of the same. Stocks could be. I mean, they all are connected to certain region. Stock market can be closed. For example, if you buy on New York Stock Exchange, it can be closed because it's connected to a certain country. The currency is not connected. Why? Because you can, even if not euro, you don't like euro, you can buy wherever other currencies in the world, because there are a lot of currencies. Of course, we don't speak about some small countries which are not interesting. I mean, the currencies are not popular. I'm speaking about pound, dollar, euro, yen. Okay, there are much more, but these are the most important, of course. The first thing what is important is liquidity. What means liquidity? Liquidity means the possibility to change an asset to money in the shortest period of time with less expenses. I mean, very easy. If you take an asset, an apartment, you can buy it by 1 million and you want to sell it like 1-2% higher price. But it will take some time for you. You cannot sell it very fast. I mean, in 5 minutes or in a few days even. It can take a few months. If you want to sell it in 5 minutes, okay, not 5, for example, in 1 hour or so, in this case you lose a lot. I mean, you will not sell it by the real prices. If it costs 1 million and you sell it to 5,000, of course you'll sell it like this, very easy. But in case you want to make money on it, you cannot change it to money very fast. As big is the asset, as difficult is changing to money. So if we talk about factory, it is difficult. I mean, it's about shops. This is much better because, as usually, furniture is not so expensive. You can really change it to money fast. And stocks, we talk about good stocks. I mean, popular stocks of the big companies like Apple, Tesla, Microsoft, and so on. There are a lot of companies. Of course, these companies are interesting for people, and you always can sell it and buy it. Liquidity is high. And what can be the biggest, highest liquidity what can have, if not currency? Of course, currency has to, because it's already money. How fast you can sell, I mean, change pounds to dollars. Or another thing that is important is possibility of manipulating the prices. For example, it means about competitors. Here there are competitors, could be, what means changing the price? For example, 1/3, who controls 1/3 part of a market, that guy is actually a monopolist. He can change the price as he wishes. Here it can be on the stock market less. It cannot be actually, so it's good because it's the companies are too big, and there are certain regulators who doesn't give this possibility to you. But when you talk about big money, everybody sees on the market. There are security commission who are always on. Always in. And if we talk about currency market, here is less possibility because there are too big volume of money to change it. Nobody can open a deal against you. Like if you open buy for euro, somebody else will think to open a sell to get it down. It cannot be because we are talking about trillions of dollars on the market. On the currency market, as usually every day is around 6 trillion of bucks equivalent traded. So that's good. We can talk much more about this. I don't think it is so important. One more thing what is interesting to understand, that it is not connected to region. That's why it is very good. If somebody in a certain country, even if, nobody wants a war, but even if something happens like that, in another country a bank works. So financial market, this currency market is actually a network of banks. Like HSBC, Barclays, Mitsubishi, there are a lot of banks, the biggest in the world, and they make this network of market. No, they make this market, which is supposed a network. So even if in a certain country is night time, for example, in UK is night time, but in Japan is daytime. So those banks are working. That's why this market is working 24 hours a day, excepting weekends. But even for a trader, it's not good to work 24 hours a day and weekends too. So you need to get a bit of relax and rest. But and what else you need? You are not connected to a certain region, so you need just computer, internet. You can trade wherever in the world you want. Internet, computer, connection to a deposit bank. That's it. Who are participants of the market? I don't think it's needed. You can check it in our videos of mine. There are actually 3 types. I'll divide them. Imagine just this is a market. There is an administration of the market, should be. There is a customer who is buying. There's a seller who is selling. So in administration, we will talk about, and there is an owner. The owner are the banks like Barclays and so on. These are the owners. Administration, this is the central bank, like it means kind of policeman, who regulates the market, everything to work clearly here. Customers are everybody who need this money for whatever our needs. For example, it can be importer, exporter companies, or other types of companies which are selling, buying, producing goods and services. The same is about sellers, the same companies. And inside here also there are traders. Who is the trader? For example, if we take a simple example, somebody, for example, here are selling this in Canada, they are selling fish, yes, at 4 after night time. They sell it in a bulk. But somebody, for example, a trader is buying in a bulk, a wholesale here, and then goes and resell it in the middle of the day with another price. So just adding. So this is a trader, a speculator. He to take it cheaper and sell it more expensive. So this is another type of participant of the market. The same is in the financial. About currency market. If you talk about Forex, the same. There are central banks, there are commercial banks, there are pension funds, they are well attracting money and they execute certain orders of the clients. There are big companies, giant companies, which always bring some details, some raw materials from other countries, and they always need foreign currencies to buy those materials. And there are simple people who need, for example, like travel cash. Yeah, you don't care so much if euro is expensive or no, but if you want to go to travel to Europe, anyway, you buy this euro and you go to Eurozone. And there are traders who are just buying to sell, not for anything else, just catching the moment when you need to buy cheap and then sell expensive. This is what is connected to market. Next thing what is important is to understand how to trade based on leverage. There is a certain margin. What's the idea? Okay, so it's around 110, for example. And there are two prices, 110 and one, for example, 15. One is ask price, this is ask price, this is bid price. It means that if you want to buy pound, you need to pay this. If you want to sell pound, they will give you this money. This difference is the bank's profit. It's named spread also. So this kind of commission for bank. That's why they are making these deals. But this is when you take a small part. If you buy in bulk, so in this case you need not 2 digits after comma, after dot, yeah? You need 4 digits, because on the market, when it's in bulk, it will be like this. One price and another price will be this. For example, if we talk about, and it's very big, you see, because you buy just one. But if you sell, for example, billions, millions, this will be just the fourth digit after dot. It will be like and like this. So you see, in a normal way, how a regular person sees, it even wouldn't be. It's almost nothing. But how it happens with traders, because otherwise you cannot trade. I mean, it's very big difference, and you cannot buy and sell. You need every day. I mean, I'm talking about intraday trading. In this case, you need big amounts to check this. I mean, to feel this, to earn money. So how this all happens? There is a certain margin. For example, 1 to 100. It can be 1 to 10 and 1 to 1000. Doesn't matter. But optimal one, the best one is this. I'll explain it later why is this the best. But what's the idea actually? The idea is that you, based on $1 for whatever, one asset, you can use 100 assets. That's the idea. So in this case, it makes sense, because before, until the 1990, I suppose, these type of tradings were just institutional traders who were doing. Now, even everybody can do it because of this, of connection of possibility to use capitals. Banks have much more capitals, that's why they give it. So what this means? There is a certain margin, for example, 1000. So if it is a margin, based on this margin, the trader can use 100 times more deposit, funds. So it means 100,000. But the minimal amount you can buy on the market, we talk with these small prices, as I told you, for example, okay, 0, 0, 0, 0, a fourth digit after comma. For this type of prices, you need to buy in bulk. In bulk, it means from 100,000 and more. What means 100,000 and more? They're named lots. Lots, it means like boxes. For example, if you go to a certain market, if you want to buy with a good price, you might buy, even in Tesco, if you want to buy one cola is one thing, if you take 10 bottles, or how many, I don't remember, okay, whatever. It's a bit another price, so the same thing is here in the market. for these prices you need to buy lots, like 100,000 is one lot of basic unit. I mean, for example, of dollars, of pounds, of whatever. If you talk about currencies, if you talk about stocks, it depends on the market. It can be 100 stocks or 1,000, for example. It depends on the market. Stocks, you cannot buy one stock or two stocks and so on exactly from the market. You can buy already from on the next level market, smaller, yes, but not exactly on the wholesale. So in this case, I suppose you understand where from the money appears. So for example, let's take one example. Pound dollar, it was the price like 1.10.000, 1.10.03, and we expect that pound increases in price. There are certain things how we forecast this, but anyway, so we take the decision, we will buy pound. If you want to buy pound, it means that we buy one lot of pounds. One lot of pounds is equal to 100,000 pounds. By this price, so in this case we need to pay $100,300, and we bought this. We need the minimal amount for making this deal. After a day, the price increases, and it's already 1.1050, for example, and the second is 53. Okay, the same, like 1.1053. Okay, so it means like almost, if it is not even 10 cents, you see half of cent it increased. 1.003, and it changed to 1.50 and 1.53. So we bought by this price and sold by this price. This movement happens in kind of from 2 to 6 hours a day, every day almost. So and we now talk about just one box, one lot. We talk just 100,000 that we use. Of course, 100,000 is based on margin 1,000. This is the minimal amount to start this thing. But of course, there are additional things you need to understand. I mean, about risk management and all other things, and how to understand that the price will increase. This is another thing that we'll discuss. But I mean now on 1,000. Of course, if we buy not 100,000, but 1 million or 1 billion and so on, you just add here zeros, digits, I mean figures. That's it. Because the rest thing is the same. I mean, I suppose you understood. You need just to multiply. Another thing, of course, I suppose this is understood already. Another thing that you need to understand, how is all this working, is actually based on forecasting the price, how the price will get high, where from do I know. So there are things a lot of people know that if outside is kind of cold, it's raining, and you go outside without a coat and you get wet, there is a big probability that you will get sick and you will buy medicines. There are certain things, like you can forecast some things what will happen. The same thing there are in financial markets. Based on what somebody said, based on interest rates, based on a lot of course, things, you can understand what will happen the next term, next period of time. These are two types of analysis. This is fundamental analysis. It means exactly from where the price appears. It makes sense based on supply and demand, of course, inside. And there is technical analysis, what means the analysis of what happens on what you see, you know, the direction, how it moves already. I'm glad that you finished your first lecture about trading financial markets. So now you can continue, you'll be one step closer to being a trader. What you should do now? You should go down on our webpage and choose the best course that fits you. Good luck!